My name is Wadnerson Boileau. It's an honor and privilege to present my scientific work at this conference. I'm so thankful to the committee for selecting my paper. To give a little background about myself, I recently earned a master's degree in business analytics and information system from University of South Florida, USA. I pride myself of being very active in finance and technology, consultant and research. I have a bachelor degree in electrical engineering from State University of Haiti, Université d'État d'Haïti. I started my career as analyst programmer developer. I've been involved in a wide variety of technological and financial solutions over the years, working with multiple organizations to bring efficiencies and provide opportunity for them. So this is our agenda today. In the first part, I will discuss what blockchain technology does, how it works, handles to wider adoption. In part two, I will examine the insurance industry and blockchain potential role in addressing economic and financial challenges. In part three, I will present blockchain business in use cases and how to turn blockchain threat into innovative opportunities. Lastly, I will leave you some key takeaways of the paper. With that said, let's start. What is blockchain? Blockchain is a 40 years technology which consists of taking cryptography, fingerprints, electronic signature, and chaining them with each other to make them unalterable. So what Satoshi Nakamoto has brought in 2009 is that no one has been done it before him, is to combine multiple technological innovations, including the blockchain, to create what I call consensus between computers in a distributed network, meaning make distrustful participants, which is the computers, agree with each other upon rules are used and the decision that is good for them all without trusted third party. So that's why Bitcoin in blockchain is often called trust machine. So there's a key component for, you can see regarding the technology, there's distributed, a cryptocurrency, and security, ledger. There's some key difference between those difference, a ledger, a balanced ledger, and transaction ledger. Ethereum is a balanced ledger since Ethereum blocks contain a copy of both transaction lists and the most recent state, as opposed to Bitcoin, which is a transaction ledger because it only contains a copy of the transaction list. The other concept is a smart contract. The smart contract is a computer program that automatically executes the preset terms of a contract when conditions are met. In terms of security, transaction validation process is based on cryptographic methods. Every transaction needs to be validated by more than 50% of the blockchain network. It's important to establish the difference between blockchain and cryptocurrency because most of the time people try to mismatch them. So those are the key difference between the blockchain and a cryptocurrency. The main difference I can highlight is a big blockchain is the underlying digital foundation that supports applications such as Bitcoin, Ethereum, Litecoin. While cryptocurrency is one of the blockchain applications allowing the transfer of value through a blockchain network. how this technology works. We have someone made a request as a transaction, made a transaction request. So this request send is broadcast to peer-to-peer network consists of computers known as node. There's a validation process occurred. So the network of node validates the transaction and the user status using known algorithm. A verified transaction can involve cryptocurrency, contract, records, and other information. Once verified, the transaction is combined with other transactions to create a new block of data for the ledger. The new block is then added to the existing blockchain in a way that permanent and unalterable. Once that's done, the transaction marked as complete. So there's a key word you keep seeing coming back is a transaction. What is transaction in the blockchain? The transaction in the blockchain refers to typical timestamp events that happen to create blocks in the ledger. Transactions are stored using private and public keys, giving the participant the option to be unidentified. The other thing is consensus algorithm. In a distributed system, a consensus algorithm helps in decision making. The consensus algorithm is an administrative process in the blockchain network where most of distrustful participants agree upon what rules are used and the decision that is good for all of them. The consensus fulfills its aim by reaching an agreement supporting collaboration, cooperation, ensuring equal rights and recognition among active participants. For example, proof of work, proof of stake, proof of importance. This is a simple graphic that breaks out the main layers of blockchain technology. This landscape is evolving quickly, and that means there aren't standard flavor of blockchain network. We have different layers. We have infrastructure layer, network and protocol layers, and so on and so forth. That gives you an idea how different layers involved in a business blockchain. Here we go. This is the insurance industry at a glance. So these are key numbers about the insurance industry. On 2018, up to 6%, the insurance industry made up to 6% of the global GDP. 7, the financial industry contribute about 7 to 9% of US GDP. 2020, the insurance industry net premium within total of $1.28 trillion and create 2.9 million jobs. By 2023, by 2030, $39.5 billion is the estimate for blockchain insurance. While the blockchain itself as a market value will be estimated by 2030 by $3.1 trillion. Those numbers are from Insurance Information Institute and US Department of Labor. So this is the key challenges and opportunities for insurance industry. The insurance sector, for the first challenge, they lack single source of truth, lack of solutions for processing claims and benefit. Insurance organization and reinsurers retaining fragmented records about insured, asset providers, and policy holders in various systems simultaneously. Insurance company and the insurance applications are lacking to provide robust security measures to secure participant information. There is a lack of visibility when information is sharing between insurers, peers, provider, and claimants. Carriers collecting and assembling pertinent information and documents from multiple sources. The other challenges that that sector is facing is blockchain mass adoption. There is a lack of skilled personnel in when it comes to blockchain technology, data privacy, integration and implementation. So there is also a choice in the digital, it is a mistrust digital economy. What are the driving forces in that sector? We consider three main driving forces. The first one is the technology. Technology is the main driving forces for the insurance market. In multiple cases, it brings innovation and efficiency for traditional insurers. However, a growing number for newly formed insurers are focusing on consumers by offering them better products and services with new business models designed to disrupt the traditional market. Stefan Binder of McKinsey and Company characterized the insurance industry as slow to change. He suggests that in the next 10 years, 40% of the jobs that exist today will be gone. And 20% of the jobs in the future will be new. He also predicts that will be more change in the next 10 years than in the last 100 years. That's very huge. The other driving force that we see is customer expectation. Policyholders, beneficiary, claimant, insured, other participants expect personalized and fast service at their finger. Prospects and clients are demanding faster and quicker transactions. What does that mean from insurer's standpoint? Staying competitive in this disrupting environment means provide the most and the best seamless experiences possible through technologies and customer service. And the last driving force is innovation. Traditional carriers and reinsurers are using emerging technology to bring certain efficiency into the market that could potentially lead to higher financial gain and more favorable competitive edge. This move may require those conventional insurers substantial change in their core business value. What are the objectives here? This work is try to reduce settlement latency in insurance claim, offer economic incentive for sharing accurate data, leverage blockchain to increase productivity and efficiency, reduce the beneficiary burden, time and expense of having to provide proof of ownership. As a result, what we expect to have, claims could be paid out in days instead of weeks, cut claims processing costs by 30%, control of fraud and sharing real-time fraud alert notification. The other expect benefits is lower frictional costs, expediting claim processing, storing information about claims and payment on the blockchain. That could eliminate paper forms and help people communicate more efficiently. Operational efficiency at risk reduction translates into reduction contract uncertainty, reconciliation times, and processing efficiency. So those are the benefits that we expect for applying blockchain in insurance. This is the prediction of Gartner. though on the left side, we have hype cycle for blockchain business. You can see we estimate that will be mainstream adoption of blockchain in insurance by at 5 or 10 years. On the right side, what you can see, there's a blockchain estimate business value creation. We are now at the second phase of the blockchain. You can see there's a massive investment on that sector, on that technology. So now that's why we see by 2030, $3.1 trillion is the business value we expected to have on that. So when we talk about blockchain, we always heard that's a term called ecosystem. What is a blockchain business in ecosystem? What does that mean? Business blockchains are set up by single company or group organization where participants are specified and known. They are designed to improve transaction processing. The insurance blockchain ecosystem refers to the different entities or actors that make up a blockchain network and how they interact. All serve a role in the blockchain and are part of how it functions. The first actor is insurers and brokers. You have insurance company. In that sense, you have insurance company that define insurance plan, solution, process claim. Their role is validate transaction. Those insurance companies, the primary job of those is claim processing. They take in premium via brokers, invest the cash flow, and pay out claims when it's needed. When it comes to brokers, they are client onboarding. We have agency, brokers. Their job is gather premium from customers. Insurance brokers is involved in blockchain insurance process, will not as intermediary, but as advisor on the new blockchain technology. Reinsurers, they are the payers at the last resort. They insure the insurance companies. Their job is to have enough capital to pay out claims if their model is not predict the volume of claims. We have, in the second place, we have suppliers. Suppliers are the developers, develop a smart contract-based rules. They are consultants. They are software engineering, developers, insurtechs. And also we have in this category, health providers perform those services and release medical paper statements. And three, we have insurers. The policy holders, those are insurance consumers who the product is designed for. In the ecosystem, we have government. We have a government agency, law enforcement, regulators, legislators, all those actors is part of the government as a insurance blockchain ecosystem. On the five, we have not-profit. Those are the association, consortia, academia, training providers. Lastly, we have collaborators. Those are the non-insurance entity that works with insurance industry, such as financial institution, legal entities, lawyer, all those are the collaborators with in the insurance blockchain ecosystem. The insurance industry already start working to provide solution for the customer. There's multiple initiatives. There's two of them can keep our attention, which is those two are B3I, we stand for Blockchain Insurance Industry Initiative, is aiming to explore the potential of blockchain to better serve clients through faster, more efficient, and secure services. The second initiative is Wixstream, with part of the Institute. this is the largest enterprise level blockchain consortium. And you can see, guys, those are part of the ecosystem. We have PNC members. PNC stands for a property and casualty insurance. LNA is life and annuity members. You can also have civics, nonprofit, collaborators, providers. All those are the part of the ecosystem. Launched in July 2017, the vision is to advance blockchain technologies and bring efficiencies to all areas of risk management and insurance industry. That's our business use case. Our main business use case. Imagine putting in insurance claim and getting a message in few hours saying your claim has been approved. With some deduction detailed below, you will be paid tomorrow. That will be a great news for someone suffer a catastrophe. When you have suffered a tragedy, what kind of emergency is critical and will lead to high customer satisfaction, which will drive revenue growth. Our business use case has 3 layers process. We have a claim submission, loss assessment, and claim approval. The process is started by a customer. The customer initiates the process by submitting a claim to the insurance company. Insurance company does the following: process the claim, ensures every supporting documents are there, request a KYC that data to insurance regulatory. KYC means know your customer. The KYC, what it does is establish a tamper-proof repository of customer data that can be safely shared between organizations. This also, the KYC process reduces risk of error, of duplication of effort through a mechanism of cooperation. It also improves visibility of customer activity across institutions. We are 3 now. Once the insurance regulatory institution confirms the KYC request from the insurance company, and then the blockchain network and smart contracts validate the KYC. Now at 4, carriers request a loss confirmation result and appoint a surveyor to do loss assessment. And 5, a reviewer does a review to make sure everything is in good order and send it to the loss adjuster or reinsurer. What the loss adjuster did, once he got the review, he will take a look to see whether if he would approve the claim or denies the claim. Once the claim is approved, a smart contract is triggered and initiates automatically the payment to the beneficiary. Now in 7. So this is a great case because now we see 7 touch points on the insurance claim. Currently, we have in the industry-wide now 26 touch points, including 5 to 7 touch points by the customer. So there's another business use case, and I'll be seeing some amount of time now. So you can have someone that the business use case diamond is certification. We can have a individual acquires a diamond, which is we have an official authentication certificate sent to the blockchain, and the blockchain put all those specificity and upload blockchain to the public ledger. And after a certain period of this, if the diamond owner declare the theft of the diamond, we can have a blockchain event tree register the blockchain diamond certificate, update with the information that this diamond has been is been theft. And also we have us months later, if this diamond reappears on the market, we can track it via the blockchain. The market check the blockchain, detects the theft and the diamond month before. In blockchain allow insurers or potential purchaser to check the history of any individual stone, including previous claim, helping insurers prevent, detect, and counter fraud. Those is another thing. Here, I want to leave you with key takeaways of this paper. To sum up, the main finding of this paper is the following. Blockchain-based solutions have the potential to increase efficiency and improve outcomes dramatically in some use cases and more marginally in others. At first, insurance industry can leverage blockchain technology to streamline claim process by optimizing the flow of data, detecting money laundering, preventing fraudulent claims. The cost of fraud accounts for at least 10% in insurance premium. The life cycle of claim can be easily tracked by monitoring the state in which the claim is in. Second takeaway, blockchain-based is providing better solution to allow participants to share data securely in real time. As a result of the feature, we are breaking down silos that currently exist in the insurance industry, which will lead to achieve enormous efficiency and improve the quality of the data. By doing so, we will be able to share the proof of insurance with other parties due to the fact the data is verifiable as a source, reduce legal dispute around the coverage, sharing common documentation for the entire ecosystem will help to reduce transcription errors and more effective in first notice of loss. Key takeaway number 3, regulatory and compliance issue. Organization is still working through operational and compliance issues because of lack of legal framework. Since blockchain transactions are irreversible, many auditors and regulators see the technology as a way to save time and improve compliance. 4, blockchain can lower operational costs by optimizing resources through fewer touch points and automate redundant process via smart contracts. At 5, our business use case demonstrate how insurance sector can leverage blockchain technologies to speed up insurance claim settlements by reducing touch point from 26, which is the industry average, to 7, cutting down the times from claim processing from 6 to 15 days, which is 2 weeks in average, by 2 or 4 days, which is hours. We can do that. So which conclude my presentation today, and thank you for your attention.